Hello, I'm Mario Toneguzzi, and I'm taking care of business. Joining me today is Phil Soper, who is President and CEO of Royal LePage in Canada. Thanks for joining us again today, Phil.
My pleasure, Mark. Always a pleasure.
Well, let's talk about the house price survey that Royal LePage has put out. Looking at the aggregate price in Calgary in the fourth quarter of 2021, the price of $576,800 overall was up 9% year over year. Good, healthy increase, and tell me why that's happening.
We have the COVID catalyst continuing to drive real estate markets. Overall, economic activity has picked up in Alberta and in Canada. You know, the GDP for the nation dropped by 5.4% in 2020 when we artificially shut down the economy to keep each other safe. But in 2021, we actually got virtually all of that back. We don't have the final numbers, of course, because we're only 13 some days into the new year, but the all indications are the economy grew by at least 5% in 2021, which is pretty cool. And unemployment bounced back. We're actually at a point now where the number of people working in this country is considerably more than pre-pandemic. And then specifically focusing on the greater Calgary region and Alberta, of course, the revival in the energy sector's fortunes has helped in a broad way. But we were already, people sometimes forget that we were already looking at housing market recovery and broader economic recovery at the end of 2019, coming into 2020 before the pandemic. So things were looking up in Alberta pre-pandemic, and certainly the lift that housing markets have seen right across North America during the pandemic as people put hyper focus on their living conditions has helped.
One of the things that I found interesting in the report was that the single detached market saw prices rise by 11.6% year over year, while the condo market was only a 3% hike. Why the difference?
Yeah, you know what, and that is one area. Let me back up just a second. One of the really interesting things about this housing market expansion that's now approaching 2 years is that it is from coast to coast, corner to corner. Big cities, smaller towns have all gotten a lift. Even really quiet places like rural Saskatchewan or Atlantic Canada. But there are differences when you dive down into each market and you look at different property classes. If you look at the role investors are playing, for example, or even the role immigration's playing during these times when borders are pretty sticky. In Calgary specifically, we have now worked through the hangover or the oversupply in condominium product that dates back a number of years. What we haven't done is moved into a period that we're seeing in, say, a city like Toronto, where condominium housing stock listings are in gravely short supply. So that 3% number represents a balanced housing market. We don't have balance in the detached market in Calgary because there are more people looking for homes than there are homes available for sale. But in the condominium market, it's pretty balanced, buyers and sellers. As contrast, if I look at the forecast for the Greater Toronto region, it's the only region in Canada where I see condominium prices in 2022 outstripping single detached properties. So we're not there in Calgary. Single detached are still taking most of the limelight.
Yeah, and when we're looking overall, I know inventory levels are pretty darn low in the city here right now. what do you expect for the spring market? Spring market is always busy. You expect it to be even more busy considering the demand still being there and the lack of inventory?
Our forecast for Calgary is that homes will rise by 6% in 2022. Uh, that's a modest improvement. It's actually right at what we at Royal LePage would consider the norm. If we look back over the last 60 or 70 years, home prices in Canada have risen by 5 to 6%, right in that range annually. And so when you're at 6%, you've actually got a really healthy housing market. In Vancouver, on the other side of the Rockies, for example, we're looking at home price inflation at about double that rate. And so I'm really pleased with the Alberta market. I think the Alberta advantage in terms of quality of life is reflected in interprovincial migration. Over the longer term, there's only 3 provinces in this country, if I look over the decades, that grow through interprovincial migration. This is taking organic birth rate and immigration off the table and just looking at when people change provinces, and they're BC, Alberta, and Ontario. Alberta slipped out of that club during some of the last 5 years, during call it a reset or a period of a lot of challenges in the oil and gas industry. Yeah. But starting 2019, it was back into a growth mode, and you really see it coming into 2022. And in particular, we're seeing a large number of people migrating from what we call the Golden Horseshoe in Southern Ontario, the most populous place in Canada, to Alberta. So this is Ontario to Alberta migration. And part of the reason is the benchmark aggregate price of a home in the Greater Toronto area, we forecast to be 1.25 million in 2022, and in Calgary we're looking at 610,000. So you're looking at prices that are they're actually double, and that advantage shows up when people can often work anywhere they want in the country. They're choosing Alberta.
Yeah. All right. Super. Well, thanks again for joining us today, Phil.
My pleasure, Mary.
All right. That was Phil Soper, who is president and CEO of Royal LePage Canada. This has been Taking Care of Business. I'm Mario Toneguzzi. Thanks for joining us today.